All right. Good evening, good morning, good afternoon, wherever you are on this beautiful, amazing planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes as always, and let's make sure that we participate and engage. With that being said, let's start the night off right. Drop me a 1 in the chat if everybody can hear me loud and clear, and we will get this session off and running. All right, I appreciate it. Thank you very much. And as always, I believe all of you should have control over your microphones. We just ask that, hey, if you're not asking a question or making a comment, please keep your microphone on mute out of respect for everyone on the call. Okay, so with that being said, let me go ahead and exit out of here. And we can, let me move some things around now. Hold on. Technology getting a little crazy. All right, so let's go and take a look at the news from today to start out. So Tuesday the 22nd, we have Governor Lowe speaking. Not much there, but hey, the New Zealand dollar. So somebody tell me in the group for the last, well, at least last couple days or so, Monday and today, the New Zealand dollar started to show some strength. Okay, can somebody tell me why? Why do you think the New Zealand dollar started to get a little bit stronger over the last day or so? Anybody want to take their microphone off mute and talk to me? Let me know what they think. No takers? No wild guesses? Nothing?
I'm sorry, I'm away from I'm cooking. Because it's a commodity. So right now, everybody had their money in the commodity.
Everybody has their money in the commodities. Okay. Okay. Why is that? Why do you think that?
Because they don't have it in the safe haven right now. The VIXI was down. I don't know. I'm actually saying I don't know because the VIXI was down. So you would think that the VIXI was down, they wouldn't go into the commodities. I'm looking at the screen that trade balance was in the negative. So only thing I could think of the news I read, they were speaking more hawkish because they said they was going to increase rates again.
Gotcha. And I see here in the chat, Tyrone Harris, rate hike, right? So Joy, exactly what you're alluding to there at the end, rate hike, right? So if we go over and we take a look at, appreciate you guys. So if we go over and we take a look at what happened, right, today, monetary policy statement, official cash rate for New Zealand, projected 4.25. They came through at 4.25. They were at 3.5, right? So they raised it by 75 basis points. Okay. So if you come over to trade and economics, you can see New Zealand lifts cash rate by 75 basis points to 4.25. So what you saw, right, in how the New Zealand dollar was strengthening over the last day or so, is that was investors, right, jockeying for positions as they were expecting a 75 basis point hike. Okay, so that's what was going on. So you all are right on it. Okay, and that's very important to know because, right, see here, New Zealand steps up inflation fight with record rate hike. 75 basis points is pretty big for New Zealand as they're trying to fight inflation, right? So they want to pump it up. Okay, now we'll watch over the next quarter or so, a few months, see how, because inflation, right, when they raise those rates is lagging. So we'll see the impacts, okay, here in the near future of a 75 point basis hike coming from New Zealand, which is a record height for them. So that's why you saw, right, the New Zealand currency starting to strengthen a bit in anticipation of 75 basis points coming across the board for the Reserve Bank of New Zealand. So that's important to know, right? Is so you kind of, if we look technically and we look at the charts, you can see some movement as a result of it coming out at 8 o'clock, but the price action has already been happening ahead of the rate statement. Okay, so that's when you're looking at the timing of things and why you may see something strengthen and some things weaken when they do. Now you can kind of see what's going on. Okay, so it started to happen. Now they're looking towards the future. Haven't had time to read the rate statement yet. It's all right here, the monetary policy statement. I'll share that link. Okay, this is the report from the Reserve Bank of New Zealand. Right, they do a really good job. So I'll read about that afterwards, and I'll put this in the chat for all of you who may be interested to read it. I find these things pretty fascinating. It's always good to be informed, but investors are gonna tear this report apart, look at the key language in the press conference, and try to get some forward guidance on what may happen next for the Reserve Bank of New Zealand. Okay, so we will continue to follow that. Moving into tomorrow, you've got the French flash PMI coming out for the Eurozone. That can have an impact. And you've got it for Germany as well, which is the largest player in the Eurozone. And then we've got pound, we've got PMI coming out. So inflation data coming out again tomorrow. Okay, so if you look here, right, for our newer people, if you don't understand what it is, you can always just click on the folder and it'll tell you exactly what it is. Okay, so actual greater than forecast is good for the currency. Okay, released monthly around 3 weeks into the current month. Above 50 indicates industry expansion, below indicates contraction. There are two versions of this report released about a week apart, flash and final. The flash release, which the source first reported in November 2019, is the earliest and thus tends to have the most impact. Okay, so why do traders care, right? All the information is here. It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. All right, so very, very important. When you read it, right, it becomes simple. Like, oh, that's what it is. That's what the PMI report is. Okay, I get it, right? So everybody's looking at these data points to try to gauge what can happen in the future. It's all about the future, okay? What's happening now is happening now in real time. It's all about moving forward, especially when you talk about the big money. And speaking of the big money, when we talk about looking forward, world economy to slow in 2023. Global economic growth will likely slow to 2.2% in 2023 from 3.1 this year, according to the OECD, as the world economy faces persistently high inflation levels, rising borrowing costs, energy supply shortages, and the ongoing war in Ukraine. Europe and the US are set to be the hardest hit, with GDP growth rates in both areas easing to only 0.5% from 3.3% and 1.8% respectively. Okay, so they're projecting a slowdown. That's important to know if you're a longer term swing trader and the direction that you may be looking to trade on, like your commodity currencies and things like that. So we'll take a look at it. Any questions fundamentally? Or in regards to the fundamentals, should I say? Okay. Nope. We've got tomorrow, right? You can see here, futures flat ahead of Fed minutes. So FOMC minutes are going to come out from the last meetings. I don't expect it to be anything shocking. Tomorrow, that comes out at 2 o'clock. That's going to be important. You got PMI for the United States as well. So it's a big PMI day tomorrow. But those FOMC minutes, I don't know. I don't expect any. From the veer from their path, right, in regards to the Federal Reserve. So that's that. And then, of course, here in the United States, we've got a holiday on Thursday, right? So November 24th, we'll be having Thanksgiving. All right. So that's that on the fundamental end. Those things are always important. Like I said, especially if you're swing trading. Okay. And then just those huge reports that happen like tonight with the Reserve Bank of New Zealand. If you're an intraday trader, you're a scalper, you definitely want to know when those reports are being announced, because they can completely blow your trade up. So always keep an eye on that. Always check that. I usually do it as soon as I wake up in the morning. I'll review the Forex Factory, check out trading economics to see what's going on. All right. So always stay in tune. Can't avoid all surprises, but you do your best to avoid what you can. All right, so let me do this. Okay, and let's take a look at, hold on 1 second. Ryan, you there?
What's up, bro?
What's going on? I think you got to switch me back. Something just happened.
There you go. You should have it now.
All right. How you doing, by the way?
I'm doing well. I'm doing well, man. How are you?
doing pretty good. Doing pretty good. Appreciate it.
No doubt.
All right. Anything fundamentally that you caught wind of throughout the day?
No. Really just looking towards tomorrow. That New Zealand interest rate came out, but nothing that we necessarily expect.
All right. Cool deal. And I know you covered those pairs this morning, correct?
Yes, sir.
Mm-hmm. All right. So let's dive into the charts. Let's take a look at the dollar index. All right. We can see on the daily that we formed that low, and now we're kind of just hovering around here, right? So let's see if we can make a higher low and a continuation up back to that next resistance level to retest the level that it broke. So that's going to be quite interesting. I definitely would like to see it move long. As I think there's going to be dollar strength. That's me. Dollar strength, based on some of the things that I'm seeing throughout the end of the year, possibly the first quarter next year, is the Fed's main thing is to bring inflation under control. So I know there's a lot of reports out there, some to the contrary, but until they start to change their tone and their rhetoric, yes, I think the dollar is going to have its periods of when it corrects, right? Just like everything, the ebbs and flows of the market, those ABCD waves. But I am still a dollar bull until something really changes. All right, because we know as of late, in times of fear, the dollar has acted as a pretty strong safe haven as well. So I am going to err on the side of a strong dollar moving forward. So that's where we are, showing a little bit of bullishness as we come into the Asian session this evening. So we can go, and since we're here, I'm going to take a quick peek at this NZD USD, because I know we've been watching that, and you can see it's still pushing higher in the zone. Okay. We see that there's right in that zone, past support becoming future resistance. We got a little boost with the news, and we can see here where we are. We're still at that level. It's just moving sideways. It's just moving sideways. So we still haven't broken above this zone yet. Okay. All right. So we're still hesitating at this level, and we've got that sideways push. Okay. When you have two currencies that are fairly strong, a lot of times you get it to push sideways, right? Until one of them wins out. Just like if you have two currencies that are extremely weak that are paired, a lot of times you'll see that sideways action. And that's exactly what you're getting here right now on that New Zealand dollar. So if we come down to the 4, right, you can see how we are right at that level. Okay, right at that level. Let me get these markups out of here from this past weekend. Right. So if we are trading zones, okay, we see exactly where we are. Okay, we need price to make a decision, okay, on where it wants to go. Okay. Decent correction, right? That was an 80-20 at one point here. Okay. Getting up around that 61.8, trying to get there, but we're getting held up. at resistance here in this zone. So we got at least we got a 50% retracement level now, but here's that 80-20 zone right there, that classic move, right? All right. That's what we like to say. Hey, we're the home of the 80-20. That type of setup that was taught to me by my mentors. We're passing it all along to you. But that's the signature play right there for the counter trend reversal, especially when you got strong levels of support, in this case, or resistance going in the opposite direction. So look, B boundary, no retracement at all. We broke that B boundary. We know that price loves to try to get back and seek out that 38.2 is like a magnet. That's exactly what happened here. Okay, so out of that zone, okay, price has now moved up over 500 pips out of that zone. It took a while, okay, and when it's doing this, it can get on your nerves a bit, right? But if you trade small, right, and you just let it work itself out, most of the time you're going to end up on the right side. Will you have your string of losses where a particular pair, and that's where the fundamentals come in, where particular pairs are just running, where hardly any type of corrections whatsoever, because fundamentally there's been a strong occurrence and it just keeps blasting through, going to those extensions with hardly any type of correction. Yep, that'll happen, right? That'll happen. But as you get back to those situations, but over time, right? As long as you're using proper risk management, it will play out. Right? I know myself, I still have losing streaks, but I stay strong in the fundamentals and the technicals and my trade plan, and I keep it rocking. So this is what we've been looking at lately, because I know it's easy for some people to see, but this was your reversal zone, okay, for this move. That's what we're identifying. That's what the fibs are helping us to identify. This was a good reversal zone, not only because it was a weekly support, but because it gave us our 80-20 situation, okay? But if we're trading zones, okay, look at what's going on, everybody, right? We see this, okay? We see this now, okay? We see price moving up. We see it broke through the zone, see? It broke through the zone. It came right back to test the zone. And now we're moving up through the zone. And now we're just moving sideways, where price is going to have to make a decision. If everybody can see that, drop me a 1 in the chat. Right? It's important.
Benny, it's been at that level like 3 times. Do you think it's gonna, it looks like it's gonna go up further?
It may. It might. It might. That's a great that's a great question, right? That's a great question. Which way is it gonna go? We need a breakout, right? We're in a breakout situation. Okay. So we'll have to continue to watch it closely, watch throughout the rest of the week. The impact, right? I have a feeling that a lot of that NZD strength was already priced in from the rate hike, which is why you don't see that crazy explosion. There was no surprises. People knew it was coming, right? So now we're just ranging, and it's going to be up to the buyers and sellers to make a decision in which way this breaks out. So what you do is just like, okay, I'm not going to do anything to this now. Okay, price is moving sideways. So it's either gonna make the strong impulse move to the upside. Okay. It just takes patience at this point. Okay. It's gonna break and retest that zone, just like we've seen it is done, and then continue long, or it's gonna start to break down. It's gonna start to fall off. Okay. All right. Like that. So we don't have to guess about it now. We just let the market dictate to us what it wants to do. Cassandra.
I see you have the bigger fib on, but couldn't you run a fib from the bottom, given we're making higher highs and lower lows, to see
you
what
can
kind
always
of
do that.
confluence we have there?
You can always do that. Absolutely. Whatever's in your wheelhouse, right? That doesn't confuse you. You know, absolutely you can, right? So we've discussed that before, right? Where, okay, if however you see it visually, right? Okay. And you only discover that by spending time on the charts. So we know we've come down to a U-turn point. We ran into a weekly support. So you say, hey, I'm at a weekly support. I've got good confluence here, 80-20 type of scenario. Then if you are saying, I'm looking to buy off that level and you run your fibs in that direction, then that's what you can do, right? The key is identifying the U-turn point. Okay, that's the key. And then from there, you can set it up how you want to. Okay. All right. I know I'm at weekly support. Okay. We've been talking about that the last few sessions. And I'm looking for a U-turn. Hold on one second. All right. Sorry about that. Now, if you see it visually this way, that I'm looking to buy, I've got an 80-20 I'm looking to buy, then look, that's fine. Whether it's on the 4 hour, whether you want to run that fib to the upside on the 1 hour, that's your play. Right? That's your play. However you see it best. Right? Hey, I want to buy the reversal. Then in your mind, when you say buy, if visually you need to make that connection with the fib running in an upward direction because you're buying, then all means do so. Right? By all means do that. Okay? Whatever helps you most as a trader.
Got it. Thank you.
You're welcome. You're welcome. There's your trend line break, right? We've talked about that in the past, okay? Where there's a lot of money to be made just trading inner to outer trend line breaks. Okay? There's money to be made, retest of the zone, right? You take the fibs off, that's what you're looking at. Breaking a retest of the zone. Look. Broke, retested the zone. You just measured it, that's all. And that can help you with your projection and where price could probably end up based off of the retracement and this correlation to the extension. But if you don't want all of this, then you can just trade zone to zone, right? Maybe you just wanted to take it to this level here at 60, 66. Then that's your setup. Any questions on that?
Nope.
Okay. All right. So let's take a look at this this UCAD. Okay. Right. The ebbs and flows of the market. Right. Look at this correction. See how it's trying to find a home and find the floor. Right. That's what it's trying to do. That's from the weekly. See it? See how it's all come together? It's trending upward. Okay. But the only way you make those higher highs and higher lows is to move in the ABCD waves. Okay. So it's right back. Okay. Remember, guys, days ago, we said, hey, maybe to get back to retest that 135 that it broke. And that's exactly what it did. Exactly what it did. Well, right back to 135. Okay. Our stochastic still in the buy zone. See if it can break that 135. If you come to the 4, look at what's going on. Look at the waves. A, B, C. Okay. See how it broke this level and pulled back? That's all you're looking at. Look, it broke through the level and it pulled back to retest the level. Look, smashed through this level. It wanted to come back and retest the level. Okay, so right. Don't let the sequence take you away from being able to see visually what the price action is doing. So we know if this fib here wants to complete, then we're looking at it to go right back to 135, right into that D extension at 135.06. So here was your initial move. Here's another correction down. So if it's going to stay bullish, right, my 4-hour stochastic is in a buy zone. If the dollar can pick up some momentum, right, here's an opportunity to move topside. That's an opportunity, right? If everything aligns for you. So you can look here, right? Even if you're using like a cloud, this is probably above the cloud and checking back. Hold on. Let me see. No, it's not there yet. So this is the cloud. We got a bullish cloud up ahead. Okay. Here's a pullback. Look, you've got a TK crossover happening below the cloud. Okay. Where's my right here? Here's my lagging span. My lagging span is above price, kind of above moving through price. Okay, so not completely above price yet. So think about how that lines up. If we break through, right? Our tickets and our Keynesian will move through. Our price and our candlesticks will break the cloud. Our lagging span to get above price, and then we get long. That's how you can trade the confirmations on that. Okay, so you got your trend line, but then you have something like a cloud that you can use for confirmation, right? Because that wants to help you get the bulk of the move, right? When you plan these lower pullbacks, right? That's early, right? When you pin it against the cloud and cloud confirmations, that's the early move, right? Clouds you want to trade the breakout, so it's later. But then you also don't have to put your stop. Right at this point, if you wait for a cloud breakout, you're not going to put your stop way down here. You don't have to do that. Okay, you can put your stop below the cloud if you want. Okay, at that point, move it up. So that's one to look out for. Any questions? Good. Okay. Look at
I
here.
had a question.
Yep.
I notice sometimes, like if the market is really flowing, you'll do the 4-hour. Like in this example where it's kind of like it pulled back and we kind of determining if price is going to go up or down. I notice you go to the higher time frames, and then sometimes you use the lower time frames. Is there like a reason or?
The main reason is because I'm educating a bunch of people from all walks of life. You know, we have, you know, there's no reason for me personally. It's just that we have a lot of people on here. Some trade, some are swing traders, some are positional traders, and some people are scalpers, you know, and day traders. So that's really the main reason.
Okay, cool. Thanks.
The main reason, yeah, because some people trade on different charts, so that's why I make sure that I pretty much keep them all marked up, because we get questions from different angles, different viewpoints. So that's really the main reason. Not so much anything to do with the speed of the market. You know, I'm still doing that top down because I just want to see like try to gain a bias of what the overall direction is, you know, over the long term, and what are we doing? Like, because if I'm on a 15-minute chart or a 1-minute chart, it's like, you know, yeah, I'm selling, right? That's all I'm seeing on that chart. On a lower time frame chart is this 681 pips. But is that a C to D move, right? On a higher time frame to where that's an extension and a push to an extension, or is it a correction? You know, is it a correction? Because that correction, even though that's 681 pips on a daily chart, that's the temporary move, because the long-term move is the swing.
Okay.
Right? Yeah. So I'm always looking for that. I always want to know, am I in an extension, right? That C to D extension, or is this a correction? You know, that gives me an idea of where we are in regards to the timing of the market and where price may want to U-turn ultimately, for the longer swing. So that's the main reason why I'm constantly going down through the time frames. But as far as operating different setups on the chart just because we've got a lot of different members that trade on different charts. So great question. Yep. So this is the UCAD, right? On the 1. So if, okay, we're looking to get back bullish. So we can say, you know what? I'm going to draw a trend line, okay? Like that. And you can say, you know what? Aggressively off the trend line, I'm going to take it, right? That's one of the methods you can do. Trend line break, stochastic in the buy zone, right? Bullish candlestick closing on the backside. Or think about it, everybody. If I've got my levels marked up and I'm just playing a break and a retest, then it just becomes this, right? This is it. This is making lower lows and lower highs. Okay. Everybody drop me a 2 if you see that. Price is making lower lows and lower highs. But because I understand the fib sequence, right now, I'm looking at this as a correction. Okay, this is a correction. So if I've determined a bias, if I have a strong bias on a pair like the US dollar, I'm like, well, I'm bullish the dollar. Well, this could be my potential low price. But what I need to happen, okay, what I really need to happen is I just don't really need it to hit a 61.8 or a zone like that, right? When we say use additional confirmations, what we're saying is I need additional evidence that this right now is ready to stop making lower lows and lower highs and is ready to reverse and make higher highs and higher lows. Well, I can use a trend line break that shows me a change, right? A directional change in the trend. The next thing comes down to just raw nuts and bolts price action. This is a swing high. This is a swing high. This is a swing high here, and this is a swing high, okay? So if I was just looking at this chart, no fibs or anything, and I'm like, you know, I'm bullish on the dollar. Price has corrected. I'm right back in the zone. This is a potential zone level that I want to take this trade. Well, okay, you're at that level. Okay, some people will buy right off that level, put the stop right below, right? The support. Okay, it's right back in the zone. I think, right, there's demand there. Boom, moves up. Okay, 34.08 and be done. Maybe I take it to 134.08 and reduce my trade. Or I say this, I need to see price make I would consider a full reversal. Here is a swing high. Okay. I want to see price. Okay. Break that level and retest it like that. And then I'll look to take it. Okay. And we've covered this before. All right. Then I'll look to get long. Okay. Like this. See what I'm saying? Okay. I want to take the trade here. High taken out. Now I've made what? A higher high. Then it's pulled back and now I have a higher low. I'll take the trade here. Okay. So just different frames of thought. Okay. Different frames of thought. Can everybody hear me? It's telling me I got an unstable internet connection. Everybody hear me clear?
Loud and clear.
Very clear.
Thank you. Appreciate it. All right. So that's where we are. So now look at it, everybody, right? Okay. If I come here and I run the fib. See? Here's the zone. There. Okay. Show me that price wants to reverse if you want to play it like that, right? So we have multiple options. You have, hey, I want to play it aggressively off the trend line. I want to play it. I want to see it break the trend line, take out resistance, retest as support, and play it there off a trend line break, right? We know that there are those of us who trade super small and we just use limits, okay? Right? Put our stop below the A, okay? Multiple ways to skin a cat. It's just what suits you as a trader, okay? Stop below the A, right? Okay? Because some people look at it like, that's in the zone. If it's going to reverse, it's going to reverse, right? Trade small. I'll look to maybe I'll look to add to my position on the break and the retest. I'm limiting in here small. I got another limit here in case it wants to retrace deeper. I got my stop below the A. As long as it doesn't take out the A, it has no choice but to go my way. So maybe I'll trade small here. And then when I get this look, I'll look to add to my position here. Okay. Like so. Right. All right. Once that gets going, it all comes down to you as a trader and what you're comfortable with. Okay. Because if you limit in at these levels, these are your levels, and it gives you everything at the level that you're looking for when you're bullish. Listen, if it's meant to swing and go to that D extension, it's gonna do it regardless. Feel better, right? Or if you're saying, hey, I want to risk a little bit more, I need that additional confirmation. Maybe I'm not, maybe I don't want to risk 1%, I want to risk 3%, and you feel better psychologically as a trader that I need to see a higher high and a higher low before I take the trade, right? That's why Ryan always talks about it's your own individual journey, right? You're the only one that's inside your head. That's it. Nobody else. So you have to, we can get you to this point, but then you have to be able to make that decision as a trader. That's why oftentimes, even though we're getting a lot of pressure to do it, signals in the world, but they don't work for a lot of people because they haven't developed what really works for them in between their two ears yet. That's why I'm pretty sure there's some really good signal providers out there, and then you have a certain percentage of people that say they stink, and then you have a certain percentage of people that say they love them, right? Because it's ultimately going to come down to the trader. Right? So here's a potential U-turn point. Right now, how you play that is 100% up to you, right? And your trade plan. That's why it's important to have a trade plan, because that's the only way to find out if your system works over time. Is if you're getting the repetition and you're following the same steps over and over again. That's the only way you can get a accurate set of data, right? Okay. Any questions on the UCAT? Okay. All right. So that's where we are. So that's what you have to determine. A lot of this depends on your lifestyle too, right? You may not have time to be in front of your computer waiting on this type of price action to happen, but you can still be successful consistently playing your zones based on your trade. Okay. All right. So take a look at the dollar Swissy. All right. So we can see, right? We're looking at a bit of a range. Okay, look at that. Okay. Look how impulsive that move was to the downside. Okay. And then look, stop right in its tracks at 93.82. 93.82. So we're back up into this zone here. We've got a reaction to the downside. So we'll see if it wants to push and make the higher high. Okay. So here we are on the 4. Look at that, right? So now you look at this, take this support off, and we said, look, we're looking for a breakout and a retest of the zone. Okay. So if you took it right out of the breakout in that bullish candle, which that's hard to turn down, right? You can't be surprised if it wants to pull back and retest the zone. That's just natural price action. Okay. So you can come to this low and pull it, right? And look and see where you are in regards to the sequence. Okay. That's where we are. Okay. You got a little 80-20 price action there off of that fib. Didn't quite get that 382, pushed up to that 118, 127 zone and came back down. Okay. So I would love to see this push back down a little further, get us a better price, get us a better discount on it, but it may not. It may hold here and continue long. All right. And continue long. It didn't hold at this level though. Didn't hold at that beat boundary. Okay. Didn't hold at that beat boundary. So we'll see what happens there. This might be the level for it to regain its momentum and push to the upside. Okay, but still bullish overall. Here it is on the 1. Okay. That's an even cleaner 80-20 there. Okay. Haven't gotten back to that 382 yet. But as you can see, that push, and look how it stalled out, had all that momentum to the upside until it got to that level. And then we broke down. So this is one to keep an eye on there. Okay. See if it can push to that 382 or deeper. All right, so here. Leave that. I don't want to get too aggressive with that. So that's right back to a 236. Okay. So you prefer for this to move down deeper before looking to take the, okay, on the reversal. The only other option you have is if, since we've had this 118, 127 zone, if it does pick up and gain momentum, I would wait for that to this price. I would wait for price to break this trend line here, right? And then push up and retest that. I want to see it hold at this level. Okay. If you were going to try to play this because it didn't hold the last time, I want to see it push this in this direction again. Okay. If it's going to take off from this level, I want to see it break and retest that 95.56 level. Okay. Then you can look. Right. You get a swing low to form there. Then you can look to see if it wants to move up. Okay. And hit that D extension. That's how I would play that one. All right. But I prefer for it to move lower, right? Retest that consolidation and then start to make the higher highs and higher lows out of the zone. Any questions on the dollar Swiss? Let's be patient.
No questions.
All right, awesome. And let's take a look at this dollar yen. All right, so there we are. Look, see here? Okay. Beautiful, beautiful 80-20 out of the zone. Beautiful move. Okay. Got down to that 50% level. Got down to that 50% level. And now we're trying to reverse. So you can see we broke back up above 140, 34. Okay, trying to retest it a little bit. So we'll see if we can get the continuation of the higher highs and higher lows, right? If you zone the zone, just trade it to the next zone, depending on the time frame that you're on and the levels that you like. Okay, so here we are. See how that's moving up? See how it's trying to retest the area? See? Same stuff over and over again. You just have to be patient. Wait for your setups because everything will start to look good. Right? So if you trade off of a 61.8, that's your thing, and you trade off of the 4 hour and you're looking for a 61.8 on your fibs moving to the upside, then you wait for that. Okay. Because if you don't stick to your rules, what tends to happen, right, is we start taking everything, okay, and then you get garlic back to the downside like that. Okay, now you're in drawdown. Now, ultimately, with proper risk management, okay, you're not over leveraged, you're not sweating bullets in that drawdown. Then, if it's meant to stay long, it's going to stay long, and you're going to eventually move back into profit. But you have to have rules, because it's like, hey, I don't trade off the 382. I want to let it fall to my 61.8. So if it does gartly and move down in the zone like that, then it's coming to your level. Okay. Right. But you have to stick to that. You don't want to do it off a feel like, well, I felt like it was going to get going off of this 382, off of this 236, even though I don't ever take trades off that level because I want a deeper discount. I don't want a 23% discount on that jacket I like at the store. I'll take 61% though. I'll take 78%, and then I'll buy it. Okay. And sometimes that's where I think a lot of us get in trouble. Right? Is sometimes we don't have rules. We haven't spent the time to put it together. And then once we put it together, we don't stick to them. But such is life, right? That's why, you know, mastering trading is also self-mastery as well. Because there's a lot of times that we do that in life. I know I do. Right? I know I do. I'm far from perfect. Okay, do it quite often. You guys should have seen me outside raking up the leaves when it was 2 degrees, when I know I should have got the leaves off the ground when it was 45. It wasn't fun. Right? I've only been living in Michigan since 2007. I know this is going to happen every year. But I didn't stick to my rules that I established for myself since living here in Michigan. I didn't get the leaves up, so I was out there freezing. But I know there's a simple way of looking at it, but my bad, y'all. Anyway, it just came to mind. But so this is where we are on the dollar yen. We go down to the 1, right? Woo. Okay, that's your 1 hour fib. We came into that 50. Right? That was my little markup. We can get a little bit more accurate than that now. All right. Joy Knuckles cold. He ain't lying. Oh, I don't want that. This is what I want now. Right? Like that. Okay. So what we want to see, right, is we want to see price move up out of the zone. If you need that additional confirmation, so right here, here's the zone I have drawn up. I like it deep, right? But if you like this 50, that's the top of the zone, then what you want to do is you want to make sure, right? Hey, I'm gonna let that move up. Okay, we just covered that, right? I'm gonna let that pull back. It's got to show me something. Then I'm gonna get long. Right? So if you want that additional confirmation, do that. Do that. Okay, because you got a ways to go. These are big moves when you're using fibs, right? When you're using fibs, these are big moves, right? So out of the zone to the D extension, it's 289 pips. So you got some time. You got some time. Okay. So now the only thing I'll tell you is that if you're waiting for this additional confirmation like this, okay, in essence, a higher high and a higher low, which is what? A wave, then you're not going to put your stop here. That puts you upside down in your risk to reward ratio. If you're going to play this game, then you want to come and move your stop. You're going to have to move your stop in the zone, either underneath the low or underneath the lower high. In essence, underneath the A on this sub fib or underneath the C, right? That's how you play it. That's how you play it. And so that way you'll still be in a proper risk to reward ratio. You don't want to enter, right, at a higher price, right? At a higher price and keep your stop way down below the A on this primary fib here. Everybody understand that? Drop me a 2 in the chat. If I'm confusing anybody, say, Benny, look, slow down, man, back up. Okay, cool. So that's where we are.
I do have a question. I think what confuses me sometimes is, like, let's go back to the 4 hour. It's when we draw in our support and resistance level. Well, even back further, let's go to the daily. On the daily, I had 140.31 as a support area there. That right there. Okay.
So it's so
So
we're 3 pips away from each other on that one. That's all.
okay. And I also had 141.529.
141.529. Let me put them in. You might be right. I might need to update.
Let's see. I don't know if I drew that one in.
140 what? What was the level?
It was 141 529.
Was that a 4 hour?
I'm sure it was a daily. Or maybe
it was a daily?
Yeah.
So let's put it in. Let's put it in on the daily. So we can figure it out for you.
Let's see. Where was that?
You had, what was it? 141.529?
Yes. But when I pull up, let me see.
Oh, that was a prior support.
Okay. Right there.
That's a prior support.
Okay. So see, what confuses me sometimes is when we say prior, and sometimes we remove them and sometimes we don't. I just want to make sure I understand the rule there, because if I leave that there, and then if I go over to the 4 hour,
okay,
go to the 4 hour, you'll see where price went through there, and it's like it may be coming back to test that area. Yep.
Yeah, right. So that's going to come down to you and your chart work as a trader. So the reason why I didn't leave it in is because it was relatively close. So it's really, you might be what might help you visually is for you to draw zones.
Okay.
Because I understand, right, as a trader, like I like keeping my charts like as clean as possible. Right. So I don't draw the zones for that reason, but I understand that price is not a line, is a zone, right? It's a zone. So this is in the same zone, right? And so the reason why that's a prior, because it goes back to, right, the staircase, okay, that we talk about. That's why you have it in there, right? So if we look at, okay, how price when it see how it was moving up, okay, so these lows right now become your support on the way down. So you see here, right, straight across, okay, and then down, right, boom. When this price reverses, that became my support 1, support 2, support 3 right here, really, right? And that wick makes it a little crazy, but you see there?
Right.
See how that stayed in there for you? You want to know why? Because I took this wick with this red price touch, but the reason why that smart support stayed in there for you is because this was the original support right here. So through this level, okay? And the reason why your smart trader came in and put it back as smart support is why? What do you think?
Because that long wick right there.
Right, but it didn't close below it. You see it?
Okay, got it.
See how I pushed, see how it didn't close below that level of support? That's why you still have it sitting there, right? So me mentally, I know that. I keep track of that, and you will too, right? You will too. And so, but I looked at it like that's where price hit, right? So that's what I'm really want to pay attention to that level there. So you're 100% within your right as a trader. It's your chart, right? To keep that on there if you want to.
Okay, but if I draw it as a zone, it would encompass that whole area right there.
Yeah, you would have got that.
Yeah.
You would have picked that whole area up.
Got it. Yeah.
You would have picked that whole area, right? But it brought it back in as a support because this price action here, it didn't close below that level. So the way the algorithm works is that's still a support. That's still holding a support. Okay. Great questions.
Got it.
Great question.
Thank you.
Yep, you're welcome. You're welcome. So that's where we are, right? That's where we are. So we'll see. We'll see what happens with that trade. Okay. So it's all going to depend on as you see, well, what chart do I like to trade on? Okay. And if your rules are, if you say, you know what, I love trading off the 4-hour chart, and your rules to get long, right, on a trade is for price to come down into a 61.8 area to look for a potential buy, then this is what you're going to stick to, everybody. This is what you're going to stick to. If you're a 1-hour trader and price has to come to a 61.8 or lower, all right, or you may have those rules built in like, oh, I'll take a 50% wick structure if I look back and I've got past resistance in a couple areas like here and here becoming future support and is in that zone. You could say I'll buy off the 50, but then I want to make sure I've got that additional confirmation to get long. Man, that's how you have to play it, and you have to get super consistent at it. Okay, so you can evaluate it and have really good results to look at, so you can tweak it. Okay, it's a constant refinement. All right, so that's where we are, because what can happen is you'll get it sometimes where price action will take off, say off this level. Okay, because your 4-hour oftentimes on a lot of pairs is your larger wave. So sometimes you'll get it to where price takes off, okay, off this level like that. Okay, and so here you're sitting at a 127, 118, 127 zone. Okay, but sometimes that price action that pushes up off this zone, it'll put you at a D extension on your lower time frame chart. See, so whereas you may have a D extension that got hit on a 1-hour or 15-minute, price might just be sitting in the 80-20 zone. Okay, you guys follow me on that? Yes, no? No, yes.
Yes.
Okay, so thank you. So price might just be hitting the 80-20 zone and is ready to collapse on your 4. You see? So if you don't stick to your rules on your mother chart, then you may be thinking, oh, I just took this off this level. I know I typically trade off the 61.8, but I'm going to take this to the D extension now. Well, it gets to the zone and it collapses. So lower time frame, 15-minute, 1 hour, you hit a D extension because you got the deep correction. But when you look at the wave analysis, oh man, this was shallow. It hit a 127 zone and it collapsed. Now it's coming back down to my price. That's why we say you have to stick to your rules and you have to be patient. Okay, we look at all currency pairs. So if you miss a setup and that setup is doesn't fall in your wheelhouse, okay, it's not part of your trade plan, you don't take the trade. Be disciplined. Be disciplined. Okay, so keep that in mind when you're trading. That used to happen to me all the time. I'm like, what is going on? I don't think I know what I'm doing. But that was my issue. I wasn't sticking to my rules and my levels. Okay, so pick you out some charts. Maybe you look at the weekly, the daily, and the 4, and that's your thing. You know, that's your thing. Is I have a busy life. I'm gonna swing trade. Well, I'm looking for 80-20s and 61.8 pullbacks on the 4. Right? I'm gonna try to determine my direction, my high and my low price on my daily. So for example, this pullback here, this is my nice low price. And then maybe I use the 4 for entry. Maybe use a daily, the 4 and the 1, right? You have to determine that as a trader. So that's that there. I want to take a look at this this Aussie dollar. All right. All right. We're gonna look at this daily and we can see, right? We mapped it out. You see you have that U-turn off the highs, right out of that zone. Okay. So we look to stay short. We'll see tomorrow if that pushes lower. Okay, because if not, close out tomorrow, you're gonna have a level of support here. Okay, you're gonna have a level of support there. So we'll continue to watch it. But so far, out of that zone, right? It's down almost 200 pips. Okay, out of the zone. So look here, right? You can see, right, where we got that pullback off this 4-hour level. But you can see how it's starting to stall a little bit right back in the zone. Look at, right, look, boom. Look at the break through the zone and the retest. of the zone. Okay. We're still structured to the downside, right? Still structured to the downside there. Okay. That's classic, right? That's textbook. Okay. Look at that. Go back to the daily. Look at where you are. Okay. Out of the zone. Just like, right, if we jump over and we look at the Aussie New Zealand. Okay. Okay. Some of you were on it, right? When we saw this price right here in the zone, say, hey, we got to swing high up against the trend line, right? Okay. Some of you were on the call. And now look what happened. Total collapse of the price. Okay. So off that swing high, that's down 200 pips. Look. It told you what it was doing. That's clean, right? We just dress it up to fit. That's a D extension that got hit. See that? A, B, C, D. A, B, C, D. Right? A, B, C, and D. Over and over again, right? So what we need to happen is what? C, D. We don't have a swing low yet. Price has been moving. It's continuing to move down. Okay. So once that swing low forms, our C will become our new A, and our D, when it forms that swing low, will become our new B. And then we look for potential corrections, right? As always, right? Either off the B boundary, off the 118, 127 zone. Can't predict that. But this is where we're moving. We're moving to the downside, right? So that was a really good trade setup, right? To take advantage of. Okay. Same thing. So some opportunities take longer than the others. Okay. We broke this level. We can't be surprised if it wants to pull back, retest zones like it's doing. Okay. But ultimately, the bias has been down. Okay. Look. See that? Yeah. See how price pushed up? Look at it. Look at the break and the retest. Yeah. Look at it moving. See that there? Okay. See how I took out this major low? All right. See how this major low was taken out? Boom. See that zone? Boom. And then it pulled right back to that level. Okay. That's just a classic, right? Reversal pattern. See? Oops. See that? Now we're pulling back. Okay. So we'll see if we can continue to get the downside momentum on that. Okay. But you don't need to know all of that to see that this is making lower lows and lower highs, and we got a pretty good pullback back to a zone that it just broke. Okay. So we'll see if it wants to continue, right? We got Fed notes coming out tomorrow. See what the Fed is saying. Okay. See if anything changes in regards to their tone, right? We're always looking at what could potentially be the catalyst, okay, to get price moving in a direction that we prefer. Questions on the Aussie dollar? Jacqueline, you like that zone to zone? You can see it clear, huh? That's good. That's good. Whatever causes it to click for you. All right. Whatever causes it to click for you. Hey, if you draw this fib like when we showed that crown, okay, and you got your fib, and if it says, hey, this is what I know, right? Okay, this is the extension. So with this move, right, if I get an extension to move down, right, that's if I wanted to pull it like that to respect the crown formation, okay, then that could be a target. Well, I know that's a target where a major correction, reversal could happen. But until then, I might know with that target, hey, I got 300 pips of downside potential. You know how I'm going to trade that 300 pips? Zone to zone. And there's nothing wrong with that. Right? Nothing wrong with that. Okay. That's trading with the trend. Okay. And we know that we've got counter trend trade setups if you trade those 80-20s and things like that. All right. So look at that. That's good. That's coming right on the money. Pretty much to where I just had that one drawn up off the crown. Okay. That should be extension at 65.35. Okay. But this move here, okay. This move here, 60 pips or so. Okay. You might say I'm out. And if I get a break in a retest there, maybe I'll trade it back down to there. Who knows how that price action is going to play out? But that's the idea. That's the idea. All right. So I know here if I play it with the fib, I'm in here and I'm not expecting to get out until here. Now, what you could do is use these zones and these corrections to retest the zones. You can use those as opportunities to add to your position. Okay. So if, for example, you use the fib and you say, you know what, I like trading at that 61.8 area. Boom, I'm in. My initial stop's above the A, like this. Okay. Bang. I'm above the A. But guess what? As it moves down and I get a major correction like this, you know what? I'm up in this trade, right? I'm up big in this trade on this swing. Okay. As a matter of fact, the lowest point, it was 134. Now I'm still up 65. You know what I'm going to do? I'm going to put in another 0.5%, 1/4%, whatever your trade plan calls for. And I'm going to look to enter. If it breaks, I'm going to put in another position there. So now I've got 2 positions running to the downside on that. Okay. So if it hits target, okay, that's 185 pips. And then this position here will be another 94 pips, all in the same move. And then you know what? If this breaks trend line and it pushes down, I can now move my stop. Okay. You may say, I'm now moving my stop down above this new high. And guess what? Anything above that stop is my money. I can't lose it. I only can gain. Okay. And as this continues to move down, eventually I move this stop on this position. I'll move this stop to break even and then eventually into profit. So boom, I'm at break even now. Stop on that position. I'm moving that down there like that. Okay. So I'm just closing out profit as price moves. Okay. And that's how you manage your trade on those long swings. Okay. So either way, however you want to play it, you're good. You know why it doesn't matter? Because the number one thing that you got right in this situation is the direction. And that's typically the hardest thing for people to do, is get the direction right. Okay. It's always the first step. I got to try to get my direction right, which is why we do top-down analysis. All right. So that's that. Any question? Oh, sorry. I'm not ready to head off just yet. Yeah, I want to take a look at this this Euro USD. Because thanks, Tyrone. I appreciate the feedback. Appreciate you being a member here, man. Thank you. So if we look at this Euro USD, right? Look at this zone. All right, look at that. Okay. We don't have the high yet. Okay. We don't have the high just yet. Swing high from a weekly perspective, but it may be coming. Okay. If we look at this daily, we're coming down out of the sell zone. Now it's doing some funny business here, right? On the correction. But this is a zone right here. Right. See how it's up in that zone right at the edge of that sell zone there, up against that resistance at 104. Okay. This was gonna be interesting. Tomorrow can help us out a lot with that, with a lot of the data that's coming out. But I'm still a dollar bull, so I want to see that fall short. So it pushed down and then it corrected, but I'm interested to see how that plays out. But I wanted to just show that as a visual, right? So you see here now, okay? Now, if you get it to where it wants to push higher, it's gonna have to go a long way to take out that high. But it could in this day and age, but across that road when I get there. Maybe it moves back up to retest 103.74. But I'd like to stay short. I'd like to stay short. That's my take on it. It came into the zone. I don't see in the future. Now, this is a long-term play, right? That's a long way. This is a daily chart. But I just don't see over the long run the euro gaining a ton of strength to take my A out, right? As a long-term swing trader. Now, this might push up and come into that 61.8 zone, which is cool. That's fine with me too. But I don't see, right, enough momentum for the euro against the dollar, right? So unless something major goes down, the Fed pivots to where this is going to take this A out and that euro gets long. Now with the energy crisis and everything that's going on. So that's me. That's my thought, just trading small, looking for that to continue to the downside. Maybe it bounces around for a while in that zone. That's okay. But when you have your risk management good, you can kind of just let those trades do what they need to do while you look at other opportunities. So that's where I'm at on the euro USD. Overall, long term, I'm still bearish on the euro versus the dollar. All right. Any questions before we wrap things up for tonight's session?
No.
No, we're good.
Quick question.
Yes.
Could you just go over the stochastic RCI,
yeah.
how you read that, please?
Yeah, the stochastic.
Yes.
So I use it mainly use it for momentum. So when you're coming down underneath this 20 zone, some people use 70-30 a little faster, especially like sometimes if they're some people they'll manipulate it a bit if they're like intraday trading small time frames, but I've always stuck to the 80-20. So when you see this push down and gets below that 20, right, it represents exhaustion, right, to the sell side. Okay, so we like to say when it gets down below this 20 that the market is potentially oversold. Okay, so it's just a kind of an extra barometer to say, you know what, momentum in a particular direction may be running out soon. The thing with all of these indicators is they're lagging, kind of like reports, right? Fundamental reports, kind of like interest rate hikes. It's lagging. You really don't see the impact of it until months down the line. You know what I mean? So yeah, it's kind of the same thing to where, okay, it's showing that it's below the 20, the momentum to the downside may slow, right? It may slow. Mm-hmm. And now momentum, you may, right? You combine it with your text and you say, you know what? I'm in this zone. Maybe this momentum is showing that it's slowing to the downside, and maybe you might catch some bids to the upside. You know, maybe your buyers may eventually come in. Maybe it's at a low enough price and your buyers may come in. When right. It could be like days, right? Depending on your chart, it might be weeks, you know, but it's slowing down. So we like to call this, when it's coming underneath this 20, that is oversold. That is oversold. And then when it gets up above 80, and a lot of times you'll see that creep. Like you see how this high point here was almost at 100%, right? We'll say, well, the market seems to be, you know, if you listen to like some of the technical analysts, Bloomberg's and things like that, they'll be like, oh, the market's overbought. So at this point, we may say, hey, technically, the RSI is showing that there's a potential for this to be overbought and price may exhaust, right? It may exhaust to the upside. And we may either see, depending on how your charts are set up, maybe it's time for a correction, you know, or maybe it's time for that huge C to D push, you know. So right now, this stochastic is still what we consider to be in the sell zone, meaning that it's overbought and now it's turning over. Right. Okay? Now it's turning over. So we consider that to be still in the sell zone. right? So it's
Okay.
just an oscillator. That's all.
Okay.
It's kind of so you could put things together like, okay, well, if I have a trade plan and I have rules, and you say, you know, I like to trade at that 61.8 level. I like that zone. Why? Because it represents a good discount for me,
Mhm.
right? This level, nothing magical about it, right? Golden ratio, all that, right? It's just from a trading perspective, if I'm trading waves, then the deeper the move back into the zone,
Mhm.
right? The greater the discount, okay? The greater the discount. You always want to buy at a discount, right? So you may have rules like, you know what? If it comes into my zone, that's number one. I'm biased to the upside, but I want a correction to a 61.8, check. Next thing I want to see if I want to look to buy is I want to have a trend line break.
Right.
Okay. Like this. You can say, bang. Okay. My third check might be, you know what? I need my stochastic at that time to be in the buy zone.
Okay.
You see what I mean?
Mhm.
Right? Right. I need my stochastic to be in the buy zone. Okay. And you may say, you know what? When it comes down into my zone, I need to be able to look left. Okay. And see that at some point, I've got structure, meaning that at this level, past resistance is becoming future support.
Right.
And you may say, you know what? If I get those things to line up, and definitely if I get that swing low, right, to form in that zone, that 5 candle combination like this. Right? And it's looking like that. Right. And right. This. So that's to the left. And then I need, right, 2 to the right. And so a lot of times it'll be like this. You have your trend line coming down like this, and then you get a break. Okay. Like this, like, bam. See what I mean? So a lot of boom. Right. So I've got that because what is that doing? That's reconfirming. If I get that to happen in this zone, that's reconfirming this area may hold.
Right.
Has resistance becoming future support. So yeah, I got price action. I got a candle to hit that level, but I want to see a little bit more. I want to see it reconfirm itself and hold that support, and then we can see if it's going to break bullish for me, right? And then you may say, hey, you know, I still want to see price push up, form a high on the other side of that trend line. So like this. So then what? Like we talked about earlier, I could put that fib on there once it breaks that trend line, and then I can look to get long, right? So there's all types of extra confirmation you could throw on there, but that's one of the ways that you can use your fib, right? I mean, your stochastic to additional confirmation. Some people use a MACD. Some people may say, you know what, I want to use a move over at this point. Right. So I might have a 20 crossing over a 50 or not, however fast you want to see the crossover. Right.
Right.
You see various ideas, on YouTube and everywhere else in regards to moving averages, whether it's simple exponential, 9 over 13, 50 or 20 over a 50, however you want it. Just be consistent.
Right.
Just be consistent with it. That's the key. And that's why a lot of times people run into trouble. They're not consistent with it. Like try it over 50 trades, try it over 100 trades. Like people be like, I tried this 6 times and it doesn't work. It stinks. Right. On to the next YouTube channel. Like,
Right.
man, it's hard to get consistent like that. Right. So this is what you're looking for. A lot of your strategies and things that you find are all based on what, everybody? Trying to get an entry. Trying to get that entry, striving for perfection, which doesn't exist. So this 99% of your strategies you see is all surrounding this. And a lot of times it's because people are over leveraged and they're trying to hit that moonshot. You know, so they spend a lot of time in the lab, you know, trying to figure out, when is this market going to reverse? When is this market going to reverse? And all we say is, you know what, that may be your thing, trying to get pinpoint entries, but still always use proper risk management based on the size of your account. You know, don't create headaches for yourself.
Right.
You know, so that's how you can use that. So great question. Great question.
Yeah,
Anybody
absolutely.
else?
Yeah, I just want to say that's what I appreciate about you guys, is that you guys are consistent. You know, it's just consistent every time. So, you know, there's no confusion, you know, so that's what I appreciate about what you guys teach, is that you're all very consistent in what you teach. You know, it's not, you don't overcomplicate it.
Appreciate it. Thanks for the feedback on that.
I'd like to say I second that, because it's so amazing that it's frightening, because I'm in the UK right now, and there's not one time, unless you guys mention it, that you've been off and you've been consistent. And you know what I mean? It's now that you've explained it so much on a regular basis, like I've watched the videos as well and everything, and it's just become simple. Do you know what I mean? And it's really, really good. Very, very good stuff, man. Thank you. I appreciate it. And we appreciate all of you and the feedback that we get, either on these sessions like you all are doing now, or we get inboxed all the time. People have questions, or, hey, can we look at it from this angle or that angle? And we do our best. So we learn just as much from all of you and the questions that you ask and the feedback. So we really appreciate it. And don't stop doing that, right? You all want to get better. We want to get better too. So thank you so much. Thank you for being here with us, you know, each night too. So, and in the morning for our 6:30 a.m. session as well. So appreciate all of you.
Definitely appreciate you guys.
Yep. Ryan, close this out, my man.
Man, phenomenal session, dude. Great breakdown. For folks, we got a few new people on the call.
Welcome.
Welcome. We're glad to have you. Some folks came back that were with us before. Welcome to the family. You never left. Continue to dive into the training, right? That's extremely important. We're coming into the holiday season. So we're going to have some periods where there'll be some open time, right? Take advantage of that time and dive into the training. And maybe you go back into the training and review some of the videos again, right? Just to continue to get the repetitions, and then take that and continue to practice marking up your charts, right? And post in the Telegram, post in the Inner Circle community questions that you have, post your charts, so that we can give you that feedback, so you can continue to evolve, right? And continue to explore this process, so that you can become your own individual within the framework of the methodology. Extremely important. And then give yourself grace, right? It's not something that's going to come overnight, but with consistency, you'll see progress, right? And that's the goal, right? Be consistent so that you can then see progress. Be deliberate in practicing what we teach and exploring the different ideas, so that you can have your own personality in this thing as well, okay? We greatly appreciate you guys, man. Finishing out this week, we're going to have sessions tomorrow. Morning session, 6:30, evening session at 9. And then Thursday, we're going to be off for Thanksgiving break here in the United States. And then we'll be back with you guys. So just give you guys a forward look there. But we greatly appreciate you, like Benny said. We greatly appreciate you guys showing up, being a part. We appreciate the feedback. And we're looking forward to some more things that we have coming in the future. So that's it, man. Appreciate you, bro.
Awesome. All right. Thank you, Ryan. Appreciate it. Hey, thanks for everybody being here this evening. We'll see everybody 6:30 a.m. Eastern Standard Time for the pre-New York session with my awesome partner, Mr. Ryan Carthage. Have a great night, everybody.
Good night, everyone.
Okay. Thank
Good
you.
night. You're welcome.